stream. Today's video, we're going to talk about how to trade support and resistances. This is for beginners, but I am going to be going over some advanced concepts in here. So welcome to the live stream. I see we've got about 100 people on to start, and that'll probably go up as the time goes on, but welcome. Super excited for this one. One thing I'll say about support and resistance and why I like support and resistance is because if you're beginning as a new trader, if you're just starting out, this is really all you need to learn how to trade in the beginning. This one simple tool or strategy is honestly one of the most effective there is. And we're going to talk about a lot of different things, but specifically how to use it for entries, how to use it for exits, 5 key strategies around support and resistance, the difference between dynamic resistance and support, and the difference between horizontal resistance and support. So we're going to go through a lot of that stuff. As always with every single video, if you're new to the channel, hit the subscribe button. That's where you get all my free content that I post on YouTube. And with every video, we do a weekly giveaway for my Trading Foundation Masterclass. Support and resistance training is in there, along with about 12 other introduction to technical analysis, trade psychology. All you have to do is like the video, leave a comment below, and you'll be automatically entered into that winning drawing. But without further ado, we're going to jump right in. We're going to go into how to trade support and resistance. I will be reading chat. Throw in your questions in there. Hit the likes if you want. If you like the content, if you don't, put a thumbs down. That's cool with me too, either way. If you want to see different things, make sure you leave a comment below so I know exactly what you want to see. This is live, so this is completely interactive between you and me. So at the end of this, we'll take some questions. We'll do some live examples on TradingView, exactly how I would trade different things. So let's jump in first. Let's get to the presentation here. So okay, so what we're going to learn. So what support and resistance are, how to trade them, and then 5 key tips for using them, and we're going to do a live Q&A. So welcome. So this is brought to you in sponsorship by Bybit. So Bybit is a margin trading exchange, otherwise known as a broker. It's a peer-to-peer trading platform that allows you to trade against other people. They make money through fees on buys and sells, and their job is to provide a liquid market. Key advantage to using Bybit over others: have USDT to keep your portfolio more neutral against Bitcoin volatility. That's why I like using Bybit. I love their liquidity. It's getting a lot more. It's been more liquidity than BitMEX. And if you haven't seen my Bybit trading, I would highly recommend. Margin trading is very risky. Go back and watch my Bybit trading. Use the test net. Practice on the test net for about 1 to 3 to 6 months. Become a profitable trader on a test net. And if you first start margin trading, start with an amount that doesn't matter to you. $50, $100, $200. If you can grow a small account, and you can grow that, 2x, 5x, 10x, then you'll be able to grow a bigger account. So always start with a very small amount that's not going to hurt you if you fall asleep and you lose your money. It's something that you can live with and sleep with if you lose it. So don't take your 25% of your net worth and go margin trade with it. Do not do that. So just take small amounts just so you can kind of learn how to use it, learn how to start learning how to trade. So small amounts. And once you can grow a small account, then you can grow a big account. A lot of people that I hear when they first start trading, they always say, man, if only I had a bigger account, I'd be making all these gains. Well, if you learn how to start small, then you can add in more as you get consistent, as you start tracking your trades and journaling and all that stuff. They've got lots of cool features like take profit, stop loss, trailing stop loss, limit market, conditional order types, 1x to 100x leverage options, post only, close on order, reduce only options. I've gone over a lot of this stuff in my previous video. I'll leave a link on the playback above here. I'll add like one of those little links for videos. The reason why I actually reached out to Bybit was because I saw a lot of people that were kind of getting on Bybit through other YouTubers and some other things using affiliate links, and they had no idea how to trade. So I wanted to put together an entire series for traders, newer traders, so that they could actually learn how to manage risk, learn how to take higher probability trades so that they wouldn't get wrecked, so they weren't trading min rage and just trading blindly in the market. So that's why I'm doing these with Bybit. If you have that kind of question in your mind, like why why is he working with an exchange? Well, that's why I actually reached out to them rather than kind of sitting back and seeing all these traders or these new amateur traders getting wrecked in the market. I thought it'd be a good way to kind of give back to the community by doing that. So this presentation, all of the PowerPoints will be available. It's a bit.ly link down below. You can log on there and then just download the guide, and it's got all these PowerPoints. It's got all the keys. It's got all the examples, all the images on there. So feel free to get that. It's a PowerPoint. So what are support and resistance? So why are support and resistance so important? For me, they represent significant turnaround points in the market. And also for me, they represent areas of supply and demand in the markets. And I'll go through some of the psychology about how support and resistance works. But the most important thing is they represent demand and supply. So resistance is otherwise known as supply, and demand is known as support. And you can have support and resistance that aren't necessarily marked off as demand and supply because maybe they're Fibonacci levels, or maybe they're moving averages, and there's no real clear demand or supply zone. But usually those terms are fairly interchangeable. So what is a support? Well, a support is a level in which the price will stop dropping due to an increase in demand, or what I call buy pressure. People want to buy at that level. And I'll go into some of the psychology on that, on why that happens. But we'll go over that. So here's a clean example of a support. The name, the coin doesn't really matter, but what we want to see here is kind of what happens when we get to this level. So each time it tests this level, we have this really strong reaction. I'm sure if we zoomed out on this chart, we'd find that this level maybe was a all-time low, or maybe a Fibonacci level, or maybe this was a previous demand zone, or maybe it was a previous resistance area. So we don't have the full zoomed out chart, but what we want to see is a reaction from this level. And a pro tip is the stronger the reaction out of a level, the stronger of a support or a resistance level that it is. So the higher the bounce, usually the stronger the area. So a resistance level is just the opposite. It's a level in which price will stop rising due to an increase in supply, meaning there's people that want to sell there. Maybe there's somebody who took a long position from below, and they are comfortable at taking a profit at that zone. And so they're just trying to get out of the market, maybe even using a limit sell. So they're creating a wall. So each time it hits that level, there's a supply. And so people are trying to buy into it, but it keeps pushing the price down. So that's a resistance level. And again, the same concept goes. If it reacts strongly to it, it's a strong resistance level. If it reacts weakly to it, it's a weak resistance level. So you can see here, we come up, and this is a daily chart. You can use any sort of time frame. It really depends on what kind of market you're trying to trade: swing, intraday, scalp, breakout, breakdown, all these different types of trading styles. But the time frame will kind of give you an idea of how to play the support and resistance, which I'll get into. So with this, what you can see is each time we touch this level, we saw a strong reaction down. We saw all these wicks on the top side. So that gives us an idea that this is a strong resistance zone. And we touch this 1, 2, 3, 4, 5, 6, 7 times. So 7 times, and it never cracked this level, which means there was somebody who was really trying to get out of that level. So there's 2 types of support and resistance, and this is not really well defined in a lot of guides, a lot of YouTube videos. So there's horizontal, and that's just a flat support resistance level, kind of like the ones that I just went over. And then there's something called dynamic support and resistance. And dynamic support and resistance are ones that move. So what can act as a support and resistance level? Well, moving averages. So those can be dynamic. So as it follows up, it bounces off those moving averages as it goes up. And same thing on the way down. As it goes down, it bounces off those moving averages. Fibonacci retracement levels and extensions. Those can act as both supports and resistances. Prior price action levels, so just strong reactional levels, maybe all-time lows, maybe all-time highs, maybe just previous bounce zones for double bottoms. Pattern formations, you can see ascending triangles, descending triangles, inverse head and shoulders, all kinds of different patterns, rising wedges, falling wedges. Buy and sell walls, you can use something called tensor charts to actually see where resting bids are at. Those can act as support and resistance. VPVR, which is the volume profile visible range. That's a tool for premium members on TradingView. But that is, so instead of having volume at specific, like just increments on price. What VPVR shows is it shows the volume at the horizontal. So it actually what price it was. So instead of like how much is the volume on the time axis, it shows you on the price axis. So that can also show you, because that can show you where people are buying and selling in high volume. Think of like the 6,000 support on Bitcoin in 2018. The VWAP, that's a volume weighted average, and so that can also act as a support resistance. Donchian channels, Bollinger Bands, all of these things can act as support resistance. There's the Ishimoku Cloud, and then also the daily, monthly, weekly, annual, quarterly, hourly opens and closes. So all of those time frames can be important in different markets. And what I'll say is all of this information can be applied not just to Bitcoin, not just to cryptocurrencies, but also to Forex, commodities, stocks, options. All of these things can translate across markets because support and resistance is supply demand. It's the economics. It's the buying and selling of a market. So a support and resistance flip, this is one of the key things that we're going to talk about as far as trading. So a support and resistance flip, also known as an SR flip, if you traders call that, is when old support becomes new resistance, or when old resistance becomes new support. So if we tap it, like let's say we've got an ascending triangle and we hit the top of the market, like 5 times, then once we break through that, then what happens is that then becomes our support. So it was resistance, and then it breaks through, and logically that resistance or that supply then becomes our demand zone as it flips through. So here's an example of an SR flip. This is on Bitcoin back when Bitcoin was at 3,500. So we had basically these BART patterns on this low time frame, but here we had a strong demand zone, and then we broke through the level pretty cleanly, 1, 2, 3, and then we broke through the level again, and then we tried to get back above it, and we couldn't really get a strong close. We had one move up, closed for a little bit, but dumped right back down. So it was a very clear and clean support resistance level at that 3580 level. So how do we trade support zones? So one popular method of trading support zones is when it enters the support zone. Okay, we don't buy immediately. Some people do, depending on how confident they are of that support zone, but they want to see the reaction. Maybe they want to see the wick that maybe drops through, and then they want to see the candle come up and close, and then they take an entry once that candle closes, confirmed that the support held. Okay, so we wait for a zone to prove itself that support will hold, and then once that support holds, then we enter. So that's one way we enter on confirmation. We wait for those candles to close. So why would I not put an order right at the support zone? Well, what we want to do is we want to wait for actual confirmation. So you can see here we got 1 tap, we got 2 taps, but then on this 3rd tap, we basically broke through. We broke through once, and then it came up, but then it turned red immediately on the next candle. We held one more time, so we might have been able to enter here on the daily. So maybe we entered here with a stop below, but then we would have immediately got stopped out. So we didn't see like a strong reaction. What I typically like to see is what I call the 3 candle method. I like to see 1 candle down, indecision candle, and then 1 green candle up. So that's what I call the 3 candle pattern on a support or a resistance. So at least you know you're getting some sort of reaction. So when we get 1 red, 1 indecision, and then 1 green, that's a good level to go into, and then the stop below the candle, maybe the wick, or just a little bit away, depending on the volatility of the market. So how do we trade breakouts? So breakouts are about the same concept as that SR flip. So what we could see here is we see the reaction here, which was resistance. We came down. And we will take a look at Bitcoin after we get out through this, once we do our examples. So we'll talk about how we could have played the market. But this is an example of ETH USD. So we saw a reaction down. We broke through. And then on the first test, what you can see here is we held it once, we held it twice. So this would be an example of 1, 2, 3 candles. So we got the 1 reaction, 2 candle reaction, and then the 3rd candle reaction. Even though it looks like 5, these 3 candles are basically indecision. If you want to take a long here, this would be a little bit of a higher risk. Yes, it's holding, but you're not seeing any sort of a reaction yet. So once we break through, so we got that 3rd candle, so we can take a long position here, set your stop below the SR flip, and then hold for our high side target. Maybe that could have been here. Okay, so right there for a very small gain, or if we're using our Fibonacci extensions or previous resistances, much higher up, at least a 2-to-1 RR if you watched my other analysis. So here's a little bit bigger where you can see had that resistance, wick down, and then we had this nice breakout, and then here we're looking for another reaction around this zone. We got it, and then a nice move up. Okay. So how do we trade resistance zones? So one popular method of trading resistance is by selling on confirmation. We talked about that before. So we had this strong reaction zone, came down. So we reacted off this, came back up, and then we reacted again, and then came back down. So again, we've got that 1, 2, and then we started to get the reaction. This is on a 4-hour. If we zoom in a little bit, probably 1 hour, 2 hour, we'll get a little bit better of an entry. But once we get this reaction, we can take an entry, stop above, and then we can take profit down low, maybe at the swing low or at the base of the move right here. So lots of different ways we can play that entry and exit there. But what we want to see is 1, 2, 3 confirmation, and then that's where we can get in. And then again, here's how we see it. So this was our support, 1, 2, 3, came back down, tested it, 1, 2, and then boom, we got this, and then we started to get this move off the candle. So really strong reaction. So a couple different ways we could pay that. So same thing as that SR flip on the long side. We can also play the SR flip to the downside. So this is a short setup. So we see the reaction, we see the breakdown, and then we come up, see the reaction there, and then a very clear, clean, and simple short to the downside. And you can lock in profits. You can use Fibonacci extensions, all kinds of different tools we can use to set those targets. Okay, so example of taking a short on a breakdown. Again, this is another one. This is the Bitcoin chart. This was back again under 4,000. So we see this strong reaction here, the break up, the BART move down, and then again clean into it. And one of the things about these SR levels is you want to look for a wick like that. That's called a bull trap right there. So when we see a clean sweep of the range, so when you see something where it says where we swept the top of the range, that's what they're talking about. So we had this clear support back here, which then turned into resistance here. So once we see that flip here, then that's where we want to take a short, because we had the 1 up, 2 down, and then we saw the immediate reaction off, and that strong of a reaction, that's a really, really good potential short sign. Okay, so what is it meant by daily, weekly, monthly support and resistance? So these are very, very key levels. I'd highly recommend marking off your charts the monthly open last month, the weekly open last week, and then the daily open, and then the daily close, the daily high, the daily close. Even Monday high, Monday low are pretty good for intraday trading. Okay, so drawing major support and resistance zones from higher time frames first can help eliminate the noise of lower time frames. So I see a lot of people that are getting wrecked in the market right now, mostly because they're over trading the chop. So what I highly recommend is zoom out, maybe to the 4-hour, maybe to the daily, even to the weekly is really, really helpful, because it really eliminates a lot of the noise. And a lot of people that use like moving average, crossover, stuff like that, if you're using on the 15-minute, you're going to get a lot of false positives, meaning a lot of trades, and it's really hard to engage with that sort of style of trading. If you're just using like 4-hour daily, it's a lot more of an easier pace than the lower time frames. So monthly price levels where found a reversal is a great place to start, and then zoom into weekly and daily. And when you're on the daily, you can use the hourly and then the 4-hour to find entries for your daily trades. Okay, so this is what the Bitcoin monthly levels look like. So you see here, and you can see how potent these levels are. This was a monthly resistance level, came up, tapped it on 13.8, and that was the high for this current uptrend. We've got this monthly level here at 64.49. That 64.49 tapped it down here. Very, very potent monthly level. We rejected at 8,500. Again, another monthly resistance level. So these red lines are our monthly resistance levels. These green lines are our monthly support levels. So really important to kind of mark these off, because they are very, very important, and they can give you a high time frame analysis for potentially where you want to get short and where you want to get long. So here's both the dashed lines are the monthly, and then the dotted lines are the weekly levels. So you can see here weekly resistance, weekly resistance. You can see here the dashed line, weekly resistance. And then we're sitting on weekly support right here at the 72.90, the 58.70, and then the 49.79. So lots of weekly support that hasn't really been tested lower at that 58.70 and 49.79. But really, really important to keep these weekly levels because they are super helpful. Then when you throw in the daily levels in, then it starts to get a little messy. So the thing with messy charts is instead of using them as lines, you can also use them as zones. And I would highly recommend looking at support and resistance as more of a zone rather than, okay, so if I'm going too fast, I will slow it down. So rather than having lines, make sure that you turn them into zones. So this gives you an idea of just kind of where you might be able to buy in based on the entire range of the zone. So what else should you know about support and resistance? So support and resistance are not exact numbers. They are more generalized zones. I already talked about that. Support and resistance zones on higher time frames are more reliable than those on smaller time frames. Support and resistances are not limited to just price action. They also occur on OBV, on RSI, on MACD, on all our oscillators. You can also use support and resistance levels, and especially on RSI, I use it a lot, and I'll show you maybe the weekly where we can show those zones. Using support resistance with a stop loss. So when you're using a stop loss on a long trade, meaning you think the price is going to go up, we don't want to place our stops at the support. And same thing, we don't want to take our profits at resistance. You want to front run resistance to make sure you get your fill, and then you want to make sure your stop loss is below a strong demand level so that you don't get stop hunted. You don't get you don't. If you're right in that stop zone where you know people are going to try and buy, or where you know supply is at and they're trying to push price down maybe to get limit filled, you definitely don't want your stop there. So a couple different ways I'll go through in my keys on how to use support and resistance, but you want to make sure that your stop is well below those key support and resistance levels to make sure that you don't get stop hunted out of the market. It happens quite often. So instead, you place it below the support level so you don't exit the trade prematurely. If in a short, you place it above the resistance level so you don't get taken out prematurely. So some key tips there. I'm going to go through these, and then I'm going to go through 5 very specific key tips that maybe you've never heard before. But support and resistance can be really obvious zones that we'll often see break to trap people into being on the wrong side. So I always recommend to wait for confirmation or make your entry as a stop hunt level. So if you remember back here on the, if I'm not going to try to go too fast, but so this wick right here, if you know that, well, let me use a little bit of a better one. Yeah. So a range high, maybe liquidity tap like this, you can set your entry up here. You know it's a strong resistance level. You know it's been wicked out a couple of times, but you can even try and enter once you see limit selling come into the market after the price pumps out of the resistance zone. So just another way to try and trade that style of a market. All right, let's keep going here, and then we'll get into some actual examples. So, okay, so this is why we wait for confirmation. So key tip number 1. The more times a support or resistance is tested, the weaker it becomes. A lot of times people think that every time it gets tapped, it's turning it into a stronger level. And the reason why is it's just economics. If someone is there trying to exit the market, so they're limit filling their sells at resistance, each time it tests that level, it gets weaker because there's excess supply, meaning that buyers, they get out. So the more time that they test that supply, the lower the supply they have. So then it gets weaker and weaker, and eventually it breaks through. It's not always going to break through. If they have like a ton of supply, if they've got 3,000 Bitcoin and they're just constantly limit selling, like we saw with Plus Token, the Ponzi scheme out of China, they had a ton of supply. They had 200,000 tokens, and they were just constantly selling on the market. So when you have that, then you're not going to break that level. So it depends on their supply level, but a lot of times classic principles state that when it's tested more times, it becomes weaker. And same thing with support. The more times a support level is tested, the weaker it becomes because the demand gets less and less. There's less buyers at that level because maybe they're running out of fiat. Maybe they've just fulfilled their position. They've got all their fill. And then once their supply runs out, boom, we crash through that support level. So key tip number 2, higher lows into resistance usually results in a breakout. Maybe you've never heard that before, but that's essentially what an ascending triangle is. So we've got that resistance level, supply demand, and each time we bump into it, bang into it, and we're forming these higher lows, that means that buyers are stepping in higher and higher as they're filling their bags and they're testing that supply zone. So that's how that ascending triangle works from a psychological level. And the same thing goes with lower highs into a support usually result in a breakdown of the market. So that's what a descending triangle looks like. And if the demand is really strong, then sometimes we can break out of the demand zone and move upwards. So key tip number 3, don't place your stops at obvious levels. We already talked about this one. I think I probably just redid this one. Oh, here was the tip. So you can also wait. You can also have a manual stop waiting for a candle closing before manually closing your trade. So if you've got a support level that you're watching in the 4-hour, maybe you get the wick down. Maybe you don't want to, close the trade right away. Maybe you just want to wait and hold off until you see that candle actually close. Same thing with the daily, same thing with the weekly. You want to wait for those candles to close before you manually close your trade. And that'll prevent you from panic selling. That'll prevent you from FOMO buying. You want to make sure that the resistance is cleanly broken, flipped, same thing. Key tip number 4. Consolidation against support and resistance usually results in a breakdown. So what I mean by this is it's kind of like the ascending triangle, but usually when we come up to a resistance and we don't get an immediate rejection and it hits, but then it sits there and then it bounces, that's usually a bull flag at resistance, and that's usually bullish. So what we want to do is we want to wait for the candle to break down and out of that top side range. We actually saw that at 8,400. I was considering a short, but I didn't end up shorting 8,400, even though that was my high time frame thesis. I was looking for 8,500. But with what happened was we didn't drop down. We didn't have that reaction off it. And then once we had the reaction off it, I got short 8,250, and then I took profit around 7,900, which I can go over with you and I can show you exactly why I did that. But so resistance, supports have higher probability to break in a downtrend. Resistance have higher probability to break in uptrends. Now, I'm going to take a minute and I'm going to explain this one really, really logically, because not a lot of people think about this. When the market is in a downtrend, okay, so we're breaking supports, it's highly unlikely that we're going to break upwards through resistance. So the higher probability trades is to short the bounce rather than to long support, because probability is on our side that we're going to continue breaking supports and head to lower levels just based on probability. If we're in a high time frame downtrend, a weekly downtrend or a daily downtrend, and we know that the trend is down, then we don't want to try and long the bounces like a hero. We don't want to try and knife catch. We want to short until shorting doesn't work. Key tip number 5, you're going to get the best risk reward by shorting resistance and longing support. Now, this seems very, very obvious, but what I mean by this is when we're in a mid-range trade. So there's the range high, there's the range low, and then there's the EQ or the pivot or the 50% Fibonacci. That's the middle of the range. Taking a trade at EQ has a lower risk reward because you're basically middle of the range. Your stop loss needs to be below the range, and your profit is at the top of the range, so you're getting a 1-to-1 risk reward. Whereas if you wait until your trade gets back to your support level and you take a trade from there, you can get a much greater risk reward on your trade, and your risk is much lower because you can put a stop right below the range in case it breaks out of there. So I'll go through those a little bit more, but that's specifically what I'm talking about on the support resistance. So any questions before we actually jump into TradingView? We got about 220 people watching right now, upwards of about 230. Hope you guys are enjoying the content. I'm trying to give you as much as I can, make you guys the best traders possible. Okay, I'm not seeing many. What is the point of even buying and putting a stop when you can just buy the stop hunt itself? Well, you never know when the stop loss hunt is going to happen. And sometimes instead of getting stop hunted, the support just breaks, and then you get stopped out even lower. So there is merit to buying the stop loss, but for me, I like to just wait for confirmation. Sometimes if I'm scalping, I'll buy the wicks if I watch it. But yeah, no thanks, dude. Great value. Okay, cool. So let me pull up trading view here. All right, so let's head into trading view. I'm actually number one on trading view right now. It's my first post in quite some time. I will do a video specifically on this analysis. It's a bit of a crazy analysis, and really we need to confirm probably in the next week or two on whether or not this is even valid. So I'll go over that on another video. Right now, let's take a look at let's just take a look at Bitcoin itself. What do you think about putting tighter stop losses and then getting back in at a better entry? Well, if you watched my risk management video, you'll realize how irrelevant that is. How do you determine range to draw out fib levels? Okay, we can go over all those questions. Let's just remove everything. So we've got this blank chart. And what we can do is we can kind of go through. So first off, let's take a look at our weekly levels, just like what we did before. So what we could see here is we saw a really strong weekly level here. Okay. And then we go down here, we saw a really strong weekly support here. And then we saw a really strong weekly support here. And those are pretty decent levels. And then right now, this weekly was a nice hammer. This weekly is starting off really, really strong. So let's see. Here's our weekly open right down here at 7,400. And we can make that, whatever we want, blue. Okay. So that's our weekly levels. So then let's zoom into our daily levels. Okay, so we've got our weekly levels clearly marked off, and you can see how important these are. You can see we tapped this weekly level around 8,500. Got close. I was looking to short at 8,500, but again, it got front ran just a little bit. But what we can see really clearly is this was a strong demand zone. So this is a really, really, really strong support. But again, each time this is tested, the supply starts to run out. Okay, and then when we see something like this, when we test it to the top side, what we want to see is we want to see these candles actually close above. So that's what I was waiting for here, and I could pull up the tweet, but I actually saw this massive reaction. I did not long down here. I liked here, but this moved way too hard, and then we were at resistance here, so I did not catch this move. I caught it on spot, like whatever, 40%. Whatever that was. But then what happened is we saw this reaction, we came up, and then we tested it again, and then this is where I got short. I actually ended up getting short around 98, 9,900 because I saw the sell pressure come back in, and then I held short, held hedged until about 8,000. So it was a really nice short trade, but then I flipped long at this 8,000 level because I thought it would hold support around there. So again, we got this strong support, and then it came down, flipped as resistance right there. Okay, so we had this strong support right here, strong support right here, came down, broke through, and then it acted as, again, strong resistance. You can see right here. And we actually just flipped this level again, came down, tested it again, top of the range. I was looking to get long 75.50, 76.50. So I got front ran just a little bit again, but I did get a couple scalp longs in this morning. So it was overall an okay day, but it could have been much better. We flipped this level yet again, came up, and then now we're testing yet again this high time frame resistance. So we have to see whether or not this daily candle closes at the top here or whether it's going to reject back down. So I would hazard to guess that this 8,500 level is a really, really strong supply zone. We can see that the market reacts pretty violently to it, and we actually are basically moving right back into this range that we were in before. So when I was saying what we want to do is it's really tough to take trades mid-range. So it's much better to take trades down in supports. Okay, so our risk reward is much, much lower down here. Whereas if you're trying to take a trade up here, where the hell do you put your stop loss? You're going to have to put your stop loss all the way down here, 7.5% stop loss. And then where's your take profit target? So you get a 0.46% trade on this, unless you're targeting maybe to the top here for a 2-to-1. But the likelihood we break out to 9,500 when we saw this violent of a reaction is a little bit low. The probability is not in our favor. The higher probability now, if you're not in a position, is to wait until maybe we test this supply zone again, and then we get a stop just above, and then we our take profit is again back down to this 7,600 level. Okay, something like that. So then we get a 2.4 RR trade. So the risk reward is definitely not there to try and take some sort of a odd trade on the daily candle. Now, if we zoom into like the 5-minute and we're watching it here, there's a lot more things we can look at, and we can keep our stop loss a lot tighter. So we've got this trend line. So maybe we're looking for something really, really simple where we've got this. So I'm looking at 5-minute low time frame support resistance. So we had this form, ascending triangle formation. We came up, hit it. So we got a nice reaction there, and then we got a little bit of an inverse head and shoulders forming. But once we come down and tap this level right here, maybe our stop is 0.8%, and then our first take profit is maybe 2%. Maybe we're targeting 8,300 or something like that. Still get a 2.7 RR, keep our stop loss nice and tight. Once this trend line breaks, we get out. Now, we do have 3 touches on the trend line, so it's a valid trend line, and we know that this reaction level is pretty strong because we had 1, 2, 3, 4 touches at that 81.50 level, 81.40 level. So we know that it's reacted once, so we can bet that it may react twice. So that's how I would see this kind of SR on maybe on the 5-minute. And again, you can use these on all different time frames, right? We're on the 15-minute now. And what we can see here, we've got a really strong support up here. And then look what happened. We came up, we tapped at 82.50. This was a strong support. Now it became strong resistance. So this, to me, on a very low time frame, this has become a really clean support resistance level. So we could take a very small short here. We could maybe set our stop above this candle, and then maybe we're targeting a breakdown to a lower level. So on lower time frames, we can take it, and you can find these support resistance flips on all kinds of things. So let's take a look at the daily. All right, let me see if any questions. People in here try to learn. Edward Park, I'm just having fun. Yeah, you guys are talking about BSV and Bitcoin Cash way too much. The reason why they're going up is I mean, some people are saying that it's the fundamentals. We can look at BSV. But what's really going on are the main miners. BSV and Bitcoin Cash have incredibly centralized mining operations. And so there's one miner on BSV who has not sold all of the coins that they've mined. So again, that's supply demand. You remove circulating supply or sell pressure on the market, and the coin's going to go up. You've also got some halving news and some other things. So BSV is on Bitfinex. Looks like a pretty much like a pump and dump sort of Ponzi scheme. I'm not a huge fan of BSV personally. But what we can see here is we've got the double bottom. We had the very strong support level here, potentially double bottom. We had this nice falling wedge structure. I don't trade on Bitfinex, so I don't even know where I could even buy BSV. It's not something that I'd ever look at, but we got this internal trend line here. 1, 2, falling wedge structure came up, hit some high time frame resistance here. And then once we broke through, now we can look at, okay, where to take profit or where might we be able to short this back down. So we're hitting the 50% fib. We're seeing a little bit of a reaction here, not much yet, but this would be my my zone to short right here. So probably 183 to 188. We can see we've got the wick there. We can see we've got some support back here. Really, really strong level. It's also between the 61.8 and the 65% fib level. So this would be a pretty damn good short. And it would look like something like this. I'd probably set it above maybe the 70.6, and I'd be targeting all the way back down to the 38.2 or most likely even the 23.6 for a 3.6 RR trade. And if you want to wait, you can also maybe wait to see if it gets up to this 70.6 level. Just maybe wait for actual confirmation. So That's how I would use Fibonacci levels, and this is just classic horizontal. Let's take a look at the weekly, see what we've got on the weekly. Weekly, you can see that weekly was a really strong support level there. And our weekly resistance, look at this. We actually came up and tapped this weekly resistance. So it's actually adhering to the weekly chart really, really well. So weekly here came up, tapped it, and now we're getting rejected back down. It wasn't really a Fibonacci level. Maybe it was if we go like all the way low to high. Let me see. Okay, so low to high was the 38.2, but you know, so there's lots of different ways we can look at the market here. Yeah. All right, so let's take a look at front run twice today. Yeah, front run twice today. Happens, man. You got to just be patient though. How far in the past do you consider valid? So that's a really good question, and that was going to be one of my key tips. I totally forgot to include that. The farther away that time is away from price, the less valid that level. The fresher that level is, so once it breaks, then that usually is very clean. And like I said, the first test of a support is usually the best time to buy it. The second time is okay, you know, it's a little bit better probability, but then the third, fourth, fifth, sixth, seventh time, you don't want to start buying those because the law of probabilities goes down much more at those numbers. You're taking a little bit more of a gamble. Yeah, we can take a look at ETH. Obviously, this is not like a charting request, but we'll just look at it from the pure perspective of price action. Okay, so we've got a little bit of a reaction on ETH. People are going crazy about it. This is still in a significant downtrend, guys. Don't get it twisted at all. This is still in a significant downtrend. There's nothing about this chart that shows bullish yet. Okay, sure, we've got a couple of wicks down here, but we have not created a higher high. We've not reclaimed any sort of an SR level. So to me, this is still a bearish as hell looking chart. Okay, so we're at 143.95. Kind of a tough area to get long, especially with weekly resistance coming up. We've got about a 4.8% move to the top side. For me, I would probably be looking a little bit more to the downside, maybe getting short at top of the range if they can wick it. Let's see, maybe 157 to 160. And then a stop just above. You can see how strong of a support level this was before we've reacted once on it. So, you know, I don't know if we're going to actually break it on the first try, but something like that, or maybe we retest that 120, 130 level. And then let's zoom into the daily, see if that analysis lines up. Yeah, so same thing, kind of high demand zone. We shorted this before. We broke this level here, but we're kind of coming up against it right now. ETH is leading the market, and I do want you guys to remember that Plus token has 100,000 Ethereum, I think 100,000. So they've got a lot of Ethereum, and they, in the words of Willy Woo, if you saw my live stream with Willy Woo, they were selling Bitcoin like they had a crack habit. So I can't imagine that they are going to hold on to that Ethereum for super long. They didn't seem intelligent enough to create this massive, FOMO market to be able to sell into. So I'm wondering if they don't just sell their ETH straight out. So a little trick. So this is a dynamic support down here below. This is just a channel. What you can do is you can just click clone, and then it gives you the same line and angle. This was a little bit of an overthrow, but this would probably be a little bit more accurate. So we've got high time frame resistance here, and we've got this channel resistance. So I would probably maybe look for a wick up, maybe to the 162 level, just right there, right into this channel resistance, and then that'd be a good short level, just because probability is on our side. What's more probable if you follow along, right? So resistance in this downtrend resistance, is it more probable that we're going to be able to short here, or is it more probable that we're just going to break through and have a mega moon candle? So probabilities say, yeah, we'll probably get rejected and move to the downside. So that's kind of the bet that I'm taking. So let me just show you BTC USD really quick. Coinbase, pretty good chart. So, oops. Okay. So this 8,400 level, again, we had this marked off. It had a really strong reaction there, but we've also got this downtrend resistance here. So we got one reaction, and then we've got this this level here. So for me, what makes more sense? We're going to come up here and we're going to blast through. Well, we're still in this lower high potential probability. Once this breaks, flips it, you know, once we break 96, 9,900, then that's much more of a bullish market because we actually created a higher high. Now we did break this level. That was our first important level to break, right? So we got at least one SR reclaim here. But now we're kind of mid-range between this range right here, which was also our range back here. Get rid of everything. So Adler Gabriel donated $10. I appreciate that, man. You mentioned that you like to look at whale movement on order books. Do you look at several exchange order books, or is looking at one major order book exchange enough? XRP? Question mark? Thanks. Okay, so I will answer the order book question. So it depends on who's driving the market. Is derivatives driving the market? So Bitfinex, BitMEX, Deribit, Bybit, Bitstamp, OKX are the futures market driving it. CME are the spot markets driving it. Binance, Coinbase, Kraken's kind of a lower tier exchange, but you know, so it depends on who's driving the market. So who's buying up the market, who's selling the market. For the last couple of months, it was a lot of people on Coinbase, a lot of people on Binance. So spot was really driving the markets. But Huobi, that's where a lot of the plus token was being dumped. And so you got to figure out where the market, where the volume's at. So you can go to like CoinMarketCap and you can take a look at, where is it at? Rankings. You can go to exchanges. And I think FTX has an exchange as well. So let me see if I can find the FTX volume monitor. Yeah, so FTX Global Volume Monitor. This is actually a lot better because the green is FTX's verified amounts. So this means that they've actually tested it, they've looked at it, they've monitored it. And FTX is run by Sam, who runs Alameda Research, who's the market maker for FTX and was the largest market maker for BitMEX. So these numbers are actually accurate, really well reported. So you can see HitBTC, fake, ZB.com, fake, white, BitThumb, fake, not real, KuCoin. I mean, maybe not fake, but just not untested by FTX. So what we can see is Huobi Global is a massive player in the market, $7.3 billion worth of adjusted volume. And BitMEX is actually third. Binance is fourth. So you got to look and you got to see who's kind of driving the market and where those volumes are at. All right, so Jacob, thank you for doing this. People pay good money for this info. Thank you, and guys like Crown for enlightening us. I know you don't have too much respect. Hey, man, I appreciate that, Mike. I love it, man. Trader Goo, be sure to drop Jacob a like for taking time out of his day to make this stream. Hey, man, I appreciate that. Thank you. So Adler, it really depends on the market. So one of the things that I missed when we were moving up, we came back down and tested 7,700 supply. Somebody on Bitstamp actually came into the market and bid really heavy, and Bitstamp has been completely irrelevant for quite some time, but they came in the market and they bid really heavy at that level. And so when I missed that, I was actually in a short. I could have taken much more profits at that 7,700 level. Instead, it came up to 7,800. I closed out with less profit than I could have if I was monitoring those markets correctly. He just paid you $10 to check out XRP. I will look at XRP. I was going through his question first. There are so many SR in the charts. Do you only draw the ones with the most touches? Yeah. So what you want to do with support and resistance, and we'll look at XRP as an example. Okay. So XRP looks like absolute shit to me. I just wrote an article for Forbes not too long ago. It had a great move back up, but this was a clear, strong resistance level. support back here. And let's zoom out to the weekly so you can see this a little bit better. So this was a clear weekly resistance level. Lots of people trying to exit out around this 23-24 cents level. Right here, this was the most important level. I think I posted this a while back. But so right here, this is and I'm going to go through one of my old videos just to kind of explain this a little bit better. But this was a really strong weekly level. I can't remember who it was. A really prominent trader was talking about how key this level was. And I said, well, to me, this looks like lower high. Okay, lower high, weekly level. I said, well, this to me looks like the 6K break at like Bitcoin. And I said, we're getting lower highs into a support zone that's been tested like, 100 times. And so this, 29-cent level is pretty key to break. Can XRP do it? Yeah, but right now, like their business model is to sell XRP to retail and to banks to sell it on the open market. That's where they make a majority of their money. So, I mean, again, they've got a ton of supply. It keeps coming out on the market. And so this is a really key level right here, this 29 cents level. We've also got this downtrend level. So for me personally, I'd probably wait until at least this 23-cent level gets cleared. Otherwise, it's a coin that just loves to get faded over and over and over. Now on a lower time frame, here we're on the hourly. We could see we've got basically this ascending channel, ascending triangle, came up, tested this resistance several times, broke through, came back down, retested it down here. Question is now are we going to make a higher high, or is this just kind of a lower high so it bleeds back down? I don't know that. This is not a chart that I would specifically trade. I was shorting XRP for, I don't remember how many months, for quite some time. I did flip long. I think I had a trading view analysis. I did get a high time frame buy signal, but then once it broke, I just closed out my positions again. XRP just broke out of a 20-day consolidation. Yeah, I mean, this is very low time frame. I just look at it from a weekly perspective. If I was going to day trade it, sure, but if I'm looking at it from a long-term investment, this is not something that I would want to trade. Something that I would rather trade or hold is something like Tesla, right? So high time frame, it's trending upwards, macro bullish. I bought spot down here. We had this ascending triangle formation. I bought it down here in the 175. If you follow my Twitter, I took profit actually at the 220 level, and then we bought back in before this ascending triangle break, and then I've been holding it ever since. I did take a short. Anybody that follows my Twitter, I did take a short at this 360 level. And I made a very little profit. I was expecting a 23.6 or at least a 38.2 pullback. Never got it, and it just kind of is on and upwards ever since. So I took a little bit of profit, stopped out at break even on some options plays, and then I'm just holding spot right now, so 478. So I like to play trending markets more than I like to play downtrending markets, unless I'm shorting, right? So if I'm shorting something, then sure. Let me think. Gold is another one. It's recently broke out, high time frame, but again, we got this rejection at the 61.8. So again, this is a nice little SR level that you want to look for. Remember on that last chart that I showed what I would be looking for? I think it was BSV. So something like that, right? So between the 61.8 and the 65% fib, I consider that kind of my golden level to short. I took profit at the 61.8 right here at 1586, and then it pumped to like 16, 17, and people were like, oh, you're an idiot. And then the next day it dumped, and then it dumped back down below my exit. So what I'm looking for on gold, if we're looking at gold, so just from a high time frame, I've got this 38.2. This range was never retested. It was tested on a very low macro scale, kind of right here, but we never kind of got that high time frame, trend back into it. This was a strong supply zone back here, strong support level overall. So this is, potentially a level that we might not be able to clear on the first go around, especially if all the tensions with Iran de-escalate and we reach a trade deal with China and some other things. So it really depends on the macro events as well for something like gold, which is a, kind of a high time frame store value. Thoughts on XRP BTC approaching the 200 SMA, and yes, Tesla's dope, obviously. Okay, so let me read through here. Given our occurrence of bouncing from the 78.6 fib lately, it lines up perfectly with 8,300, 8290-ish front running it. In my opinion, if we don't close above 8,300 in the hour time frame, we move down to 7,500. Very good thesis. Yep, absolutely. Can you define local highs, lows, swing highs, lows? Yeah, so, okay, so swing high, swing low is, you know, swing high, swing low. So that's like high time frame, swing high, swing low. Local high, local low would be like if we're like in the 4 hour and we're looking at something like this. So this is, you know, local high, local low, right? So something like that. So we're, you know, if we're looking at, okay, so we're bullish, we're opening up. I think it's hitting the 10 EMA right now on the daily, along with high time frame range support flip. Let me take a look. Yeah, so right now, basically, we're flipping on this top of the range, and then the 10 EMA. I think I just posted this the other day. So we're seeing gold kind of flip this 10 EMA. First tested the 10 EMA on the daily, and we're also testing the top of the range. So a low time frame, we're using this Fibonacci. So maybe we long this zone on the 10 EMA. It's the first test. It's tested it once down here, and we can see that it's holding as a support. So this is a dynamic support. So now maybe we're looking at, okay, so we got long down here, and now we're looking at our take profit, and maybe that's just at the 61.8, which is, you know, maybe the range high of the wick or whatever. So that's like local time frames. That's high time frames. What will be Bitcoin value by May? I don't know, man. $6,300. Adam. Okay, I'm going to do one more chart, and then I'm going to probably sign off here because it's been a little while. But I will be doing a lot more videos, a lot more high quality content. I want to get a little bit more into macroeconomics for you guys too. So Adam was added to Coinbase. So we've got a couple different things. So let's take a look at the weekly first. Let's mark off our weekly levels. So lots of resistance in this level here. And then we've also got this level up here. Support levels, yeah, we had this nice tweezer bottom actually right there. We actually tested this 4 times and it held all those times. So that was pretty nice. Daily, I'm sure we'll probably find something right there on the daily. Yeah, that was the 100 MA support right there, which was resistance, broke through, and then support. So this 100 MA is pretty important. So if we get a test down here, probably watch that 100 MA. 200 MA is sloping to the downside, so that's not a good look. 200 EMA is completely flat. We actually just got an SR flip on the 200 EMA right here. That's this orange line. So not too bad. And let's see if there's anything else on this. So you would have expected something like this to come down and test and hold, but this just broke through. So this wasn't a really quality support resistance level. So probably not a lot of volume got exchanged right there. So most likely the BTC pair is driving this because you can see it didn't react to that at all. And yeah, this was a clear BTC pair driven market. So you can see right away, I'm going to delete all this stuff really quick. So you can see right away that this was a really strong support, broke down, tested resistance, and then once it broke through, just this whole range right here. Resistance on the bottom side, broke through resistance, support once, support twice. So this is that 1, 2, indecision, buy back up, 3, and that's a place where you can get long, then target the top of the range or our Fibonacci level pullbacks. So something like this. And you can see we came down, tested down here, broke the 50 fib, and then we came right up to that 70.6, double topped it, and then now we're heading to the downside. So got a nice little reaction here, but the BTC pair is now in a downtrend. Well, actually, no, we just tapped the uptrend. So still in an uptrend. So pretty decent. I think that, you know, we'll probably come up and retest this level. We flipped this SR right here, which was our 50% fib. It was also our breakout resistance 1, 2, 3. Came down, tested it. Daily candle closed up, flipped it right there. So we'll probably at least get back up to at least the 61.8. What time frames do you want it to confirm to count as confirmation? I personally am almost always a 4-hour trader. That's my favorite time frame to trade. Thanks, Dr. Canfield. Appreciate your time and knowledge. Absolutely. Appreciate the content. You put out content that is very clear and very thorough about the details to make good trades. It's rich content, man. I appreciate it a lot. Man, I appreciate you guys. Thanks for all the good feedback. Bro, stay. I just got in. Very high quality content. Bitcoin 12-hour stock crossed up on the low. Okay, cool. Let me see. PNC is a stock that nobody is looking at. You know, I like PNC. PNC is good. I have an account there. The problem with PNC, you can see I'm a crypto trader when I add BTC to the end of it. Yeah, so this is a nice uptrend. First bank stock I've looked at in a while that's in an uptrend. I'd be getting real cautious though. I mean, this is a little bit of a double toppy looking market. I'm sure if I throw up what was our earnings report? So we've got earnings coming up in 5 days at high time frame weekly double top resistance. And this is probably a pretty key fib extension from this move down. Let's see. Yeah, we're almost at the 2618. Let's see what it looks like up here. 1618. Yeah. So let's throw in our moving averages. Look at that 200 MA weekly bounce, holding the 10 EMA right now. Slightly divergent on high time frame resistance, but it's not divergent because we didn't make an all-time high break. So if earnings exceeds expectations, then yeah, we may go into price discovery to top side, and we could be targeting 1.272, 1618, so 179, 198. If earnings is good. If earnings is not good, I would expect probably at least 130 on PNC to either reload or to rebuy on this 200 MA weekly. 200 MA weekly and 200 EMA weekly are freaking just like God tier traditional market moving averages to use. But the stocks keep going up and up and up. How is this sustainable? And they call Bitcoin the bubble. Well, Bitcoin is much more volatile. It's a nascent market, and it's prone to high manipulation on unregulated exchanges. Stocks in and of themselves, the way that they're designed, is quantitative easing is good for all markets. It's good for Bitcoin, good for gold, good for stock markets because it's free money. But who gets that money is the better question. Maybe I just need to do a whole video on this, but the people that are getting the money are banks. Specifically investment banks and like the big banks, Blackstone, JP Morgan, Goldman Sachs, Lehman Brothers. These are the guys that are getting cheap money. So they're getting really, really cheap money, and they're using it to position themselves in some of these assets and markets, Berkshire Hathaway. And so stocks can go up for a long time, and typically before market crashes, we see melt ups rather than meltdowns. Okay, any questions specifically about putting stop losses below wicks can be risky as big players can use that area to grab liquidity. What are some advanced ways to determine where to put a stop loss? Well, one way to determine where to put a stop loss is by measuring volatility. So when you measure the volatility, so you can use an indicator like the average true range. So let's take a look at BTC as an example. So there's and we're actually testing that 20 MA weekly, which has rejected us once, twice, 3 times. So from a weekly standpoint, that's pretty bearish from at 8,400. So unless we can break and flip this 20 MA, this is, I mean, you can see 2018 lower high, weekly MA, 20 MA, just rejection, until eventually capitulation break, lower high, 20 MA, rejection, and you can see it tried to form some support there, but. Okay, so let me delete everything and then I'll show you specifically. So let's zoom into the 4-hour and then let's throw up the ATR, which is the average true range. So what this measures is it measures the volatility of a market. So this tells you, basically the range of how big this is. So a good formula is stop loss equals ATR times 2. So this is a loose stop loss, and if you just follow my risk management guide, this will make a lot of sense as far as like position sizing. So stop loss equals ATR times 2. So the ATR on Bitcoin right now is around 170. That means like each candle is around $170 on a 4-hour time frame. Which makes a lot of sense. So if you're going to take a trade, so let's say you are looking to long the double bottom pullback of the top of the range that we had back here. Whoops. Something like this, okay? So let's say you're looking to long that. My entry was a little bit lower. My entry was around 75.90. So I never actually got to my level. But let's say you want to take a trade here, like top of the wick. Okay, cool. So what we got to do is we've got to first look at where is our take profit. Okay. So our take profit, maybe you're just targeting the 78.6 of the move. So if we use the local high, local low, boom, boom. Okay, so maybe our target is the 78.6. So 8,300 on the spot. So 7.89%. So then what we got to do is we got to take 76.92 and then we have to multiply 169 times 2. So 169, so we're going to pull out our calculator. 169 times 2. So $338. So then what we want to do is we want to make our stop loss basically $336. So that's going to prevent you from being stop hunted. So you want to make sure that your target and your stop loss line up so that you've got at least a 2-to-1 RR. So this doesn't give us a 2-to-1 RR, but if you're okay taking a 1-to-1 RR or 1.5 RR, then this trade will work out. Now some traders, they only use one ATR, which would be like 169. So what you're actually doing is you're taking a trade and then measuring the volatility and then multiplying it by 2. So a 2 standard deviation away from the amount of a candle measured move. And so that's a good way to basically not get stop hunted. Are SRs explicitly set by whales, or is it more of a coincidental thing? So yeah, so let me go into the psychology of SR really quick. So a lot of times, so let's take someone like me, for example. Let's say I had my entry, I had laddered entries from 76.50 down to 75.60. So I had about a $100 range and I had scattered orders in through there. This was true. This was this morning. So let's say that it comes down, but let's say a lot of traders already know that someone's trying to trade there. So instead, what they do is they buy it up here. It comes down and they just market buy 10 million, 10 million, 10 million. And so once they get to that level, it misses my level and I'm like, oh shit, we react. So then what I do is then I market buy back in, right? Or, I'm starting to try to buy back in. So I'm FOMO because I miss my entry, right? Well, I don't, because I'm very, very patient. And I just look for the next setup. But a lot of people, when they miss that level, then they start kind of buying back in because they're like, oh, I missed my buy-in. So that's one way that it works. But a lot of times, once it breaks this level, people are like, once it gets back to this level, I'm definitely going to buy back in. Institutions, retail, anybody who's trading the market, they see this clear and obvious support level. So it's kind of this self-fulfilling prophecy where it there was previous strong supply, and then it flips, and then it turns into strong demand. And then the other thing is, tensor charts. Just sell walls and buy walls in general. Super simple. You can actually see this shit live, right? So you can see there's a sell wall at 8,000. You can see there's a sell wall at 8,100. So that is the actual supply and demand of the market. So you're charting it here, but on tensor charts you can see it live. I can see the wall right there. Right now, if I zoom out, there's a wall up here at 8,500 on Coinbase. That might be a good, decent target that they might look to take profit. There's nothing below. The market tends to move towards liquidity. So 8,500 is a level that I'm definitely watching for a potential short. And if we look at the market as a whole, we hit that 85. We didn't quite reach that 8,500 level. But when we zoom, when we use our Fibonacci levels, we can see that the 50% fib was right at that same level. So we've got, double confluence into, what we're looking at. And then when we zoom out to the weekly and we throw on our moving averages, well, we've also got that 20 MA right at our 50% Fibonacci level, right at our 8,500 sell level. So that's probably a level that they're probably going to want to try and sell. Now we're on the 15 minute, but on the 4 hour, we can zoom out and look at it a little bit better. But so again, we've got that 8,500 level. We came up, touched it again. So decent short zone. Boom, we came down. We've got these buy walls down here at 7,500. They've been pulled now, so looks like they're trying to head up to the rest of the market. So something like that, how you can kind of put all that shit together. But the most important thing is confluence in your trading, and confluence is where you get a bunch of things that kind of line up with each other. And that's kind of like on my my trading view analysis, something like this, right? I don't want to put out something where I say, Bitcoin could go down to $5,000, down here at this 5,000 level, unless I had like evidence. So whenever you're trading, it's always this pros and cons list, this bullish list, bearish list. What am I more? Am I more bullish or am I more bearish? So you got to form this thesis and you constantly have to adapt. I was heavily bearish once we got to 9,900 and got that sell-off reaction, mostly because there's a Ponzi scheme dumping 100,000 tokens on the market openly, and they're using market sells. So why in the hell would you ever be bullish into this guy who's just dumping tokens on the market? So my thesis was, this guy's going to keep dumping. I'm just going to keep hedging short, and I'm going to keep taking short trades rather than trying to catch the knife. So something like that. 8,500 is where the 3-day Ishimoku is at. I personally don't use Ishimoku, but yeah. I'll stop asking and I just listen. You are awesome. Yes, patience. Can you also explain how you ladder entries while maintaining the same risk per trade, e.g. 1%? That's like a whole video of in itself, but yeah, so I can do something like that. So let's say you want to short 8,500. So what you can do, really simple, is if you want to get an early front run entry. So let's say your portfolio is $1,000. And you want to keep a risk per trade of 1%. So on this trade, you're gonna risk $10. Okay, so $1,000, 1% of $1,000, 123 times 0.01 is $10. Okay, so that's our risk amount. That's how much we want to risk if our stop loss is triggered. But let's say we want to short 8,500. But let's say you want to get a little skin in the game in the beginning. So 8,350 is your first level, and then 8,500 is your second level, and then maybe you want to catch a wick on the top side, so you catch 8,600 on the top side. So this is your laddered entry range. Now, this is just for hypothetical examples, but if you've got $10 and let's say your stop loss is, so let's say your average entry is going to be 8,500, and let's say you want your stop above here. So you want your stop to be, come on, buddy. I don't know why it keeps defaulting starting wide like that. So let's say you want your stop above this candle right here, okay, and above the 65% fib. So 7.23%. So you need to have at least maybe 13, 14% if you want to keep a 2-to-1 RR. But let's say you're targeting 72.24. So what can happen is your stop loss is 7.23% because your average entry is going to be 8,500. So you want to take $10 divided by 0.072, so 7.2%. So that gives us $138. So out of your $1,000 portfolio, you're going to be putting about 13% in, so $138. So then what you do is you divide $138, divide that by 3. So then my laddered entry is going to be $46 at $83.50, $46 at $8,500, and then $46 at $86.30. Now, what happens if it comes up to here, only gets one part filled, and then drops back down? Well, then you're in for $46, and you can raise your stop loss back to break even, and now your trade is pretty much risk free if you get this strong reaction level back down because you got your stop at break even. And so you got 1/3 position. But once you get through here, the average price entry is going to be 8,500. So that's how you manage your risk with layered orders. Thank Thank you, JC. Such a freaking bro. Yeah, man, dude, you've been following me for like 3 years on YouTube. Chill, man. I see you on a couple other channels too, but I appreciate the support. I know who all my loyal followers are on Twitter, YouTube. You guys been with me for a long time. Edward, you've been with me for a very long time as well. So we got 350 people on here. Anything else you guys want me to take a look at or ask on? We've been going hard in the paint for, I don't even know how long it's been. I'm looking at Mana. All right, let's take a look at Mana, brother. Mana BTC. BTC pairs have been highly, oh shit. That's not a weekly you want to see though. I mean, yeah, we got this nice little cup maybe handle, 10 EMA test on the weekly. This is probably a level that I would be a little bit more interested in, is this 150 sats level. Pretty massive downtrend. This level is very key as well. Let's take a look at the daily. We're testing the 50 MA, the 200 EMA rocked it. I don't see anything on this chart, man. I'm sorry. Do you have anything on Roku? Roku, I don't even want to look at Roku, dude. Oh, man. I had buys. I had buy orders. Where was that? I had buy orders right here. 25.20, man. 25.20. I don't want to look at Roku. Roku makes me sad. I buy orders at this 25.20, and then I was like looking for a pullback entry. And then it just basically went parabolic, and then we hit high time frame resistance. I took a short right here, and then it formed basically this little bull flag. This is such a depressing chart to look at. Nice little bull flag channel. And then it came up, coiled at resistance, never actually touched back down on the 200 MA. That's what I was waiting for on the daily. And then it just chatted out, you know. And then up here, you know, lower high. This looks like it wants to come down and test this 200 EMA. So if I was going to be a player on Roku, I'd probably wait right there. 116 to 117, maybe even 113. But this looks like a pretty damn good level. See, we had this gap here. This was a gap fill move. Came down, filled the gap, came back up, came back down. So I'd probably look at 113, 116. A little weak right now. It depends on the 4 hour. 4 hour, yeah, 4 hour broke 200 EMA. You can see the 200 EMA tried to hold it up a couple times, but this 50 EMA is holding us down. So boom, yeah, definitely look at that 116 level. Oh man, whew. If I'm talking too fast, man, I'm sorry. New here, but took the 21-day challenge and love your style. Crown interview with you was amazing. Thanks for sharing so much of your amazing life. You are awesome. Appreciate that, Jev. Hope you got a lot out of the 21-day Trading Foundation Masterclass. And it's not that expensive, guys. It's like $100, $200. If you really want a foundation of knowledge, man, that's just it's just a curated amount of content. It's like 30, 40 hours. It's not too expensive. What custom fibs do you use? Yeah, I can give you my secret sauce. Depends on which market, right? So there's different fibs for different markets, but my secret fibs are the 70.6, the 1272, the 1414 is another one, and then the 147. Oh, we actually have a gap down here. That's not filled. Could be a breakaway gap though. So 110. Can you look at GBP, JPY? I'm not a Forex trader. I can look at it. My edge is Bitcoin. And stocks, I came from stock and options. I've never traded Forex in my life. I do trade commodities though. So I trade, my favorite things to trade are Bitcoin, majors, and then altcoins. I love me an altcoin trade. And then below that, I love to trade stocks. And then I trade commodities. So that's kind of the order of what I like to trade. Hi, I'm from EU. Could not sleep, but finally got you live. ACDC, what's up, man? Thoughts on BAC? Is it looking juicy, baby? I don't know how we just turned into a chart request channel, but that's okay. Is it looking juicy? Well, we're on this 50 MA higher time frame analysis. We've got a little bit of support right here at the 34 level. Geez, man, Bank of America, our bank stocks back. I haven't even looked at banks, man. This is crazy. I've been so focused on. Oh no, let's look at the weekly. Okay, so we are in an uptrend. We both flagged up. Banks look like they're coming back for some reason. Bank of America is garbage. I do not like the bank itself, but we're at the 61.8 pullback. This doesn't look like the best area to get long at. I'd probably actually be starting to look for a bit of a short here. 61.8, nice rejection, right in my rejection zone. Weekly, we did find the 200 EMA. See what I mean? 200 EMA weekly in traditional markets is god tier. You want to see something that'll make you cry? I mean, you can outperform almost every hedge fund. Choose the 200 EMA, 200 MA on Apple weekly. Look at this shit. Bounce, 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 uptrend, 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 and now you're, god tier trader. Tesla. This one, bounce, 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 bull trap, ascending triangle, chatted up. And this one was interesting because, where was that at? Not Tesla, Apple, Tesla, Google, Alphabet. That never actually tested the weekly 200 EMA. But we're moving into all-time highs on Google now as well, 1428. Yeah, this is called a melt-up, guys. I mean, this is what happens in the stock market. We got this December sell-off back here where I took a short on a lot of the markets. But yeah, right now we're just in melt-up mode. This is where the rich get richer. I took the master class and I'm still a VIP, and it's definitely worth the money. Jacob and Chingas are true market masters. Thanks, Joe. Appreciate that, man. Too broke to stay in subscription trading signals. I want to minimize my exposure to shitcoins anyway. 21-day challenge was great. Oh, thanks, man. Appreciate that. What methods do you use to backtest strategies and strategies? There's a lots of different ways. TradingView has a strategy tester. I'm not an algo trader. I trade all manual. I do have some market making algos that I run to provide liquidity for some exchanges, but other than that, I'm mostly just a directional trader. All right, guys. I appreciate you guys. 360 people on. I think we got up to 400. That's amazing. Thanks for the $10 donation. I appreciate that as well. Hopefully you enjoyed my analysis of XRP. Probably not what you wanted to hear, but I just try and keep you guys level. I mean, if you guys aren't in stocks right now, I mean, we're at an all-time high in the market. I agree, but stocks have been like insane. CrowdStrike was a one that I just recently got into. I recommended that we bought it. Man, this one's moving. Woo! So CrowdStrike is a counter cyber terrorist, a cyber threat organization. This is the 4 hour, so this is a real recent chart. We had this ascending triangle formation, lots of ties to military. But once that Iran deal thing came down, I said, all right, let's get into some CrowdStrike. CrowdStrike is we bought some options plays on CrowdStrike, doing really, really well. But yeah. Thanks for the stream. All that you do, dear doctor, all the best to you. What moving averages do you use? I just went over them. Just go back and look at my chart. I use a ton. I use like 20 different moving averages. 20 MA, 50 MA, 21 EMA, 100 MA, 200 MA, 350 MA, 10 EMA, 500 MA, 200 EMA, 1184 MA, which is essentially the weekly 200 MA. Thank you, Kazbeat says space. Cool, man. I appreciate you guys. You guys are awesome. I will be getting a lot more videos on the market. I had, I just took some time off for the holidays. I got that YouTube whatever going on, but don't the markets always pump during election years? Yeah, very, very true. I think next year will definitely be a down year for the market based on a lot of different indicators and analysis. I do not think 2021 will be a bullish year for the markets, but so yeah, appreciate you guys, and I will see you on the next stream. And please, yeah, let me know in the comments what you guys think and what else you guys want to see on some of these educational videos. And I will create a playlist so all of these are organized for content. See you guys.